All right, hello everyone. I hope you're all doing well. I've just noticed I am not in the video, so I'm going to try to. Oh, there I am, down in the back corner. It's like, hey, I'm over here. Hey, you guys see like Peyton Manning saying he was sick of that guy from New Jersey, the new quarterback's agent? It's like, dude, if anyone should be sick of something, it's Peyton Manning. The dude is everywhere. Okay, there's not a product he wouldn't endorse. But I don't think you came here to listen to me bitch about Peyton Manning. I think you came here for me to tell you how you can make money in the market. So my name is Mark, and I am the head of the Benzinga Trading School, and I'm proud to be. We have a great community. Our students learn a lot. You should come by. It's all levels. You could be a beginner. You could be experienced. We have a good community. So, all right, let's just go see what's going on in the markets here. So, S&P, not unsurprising after a huge move like we've had. It's not surprising we get a little bit of a sell-off, profit taking. Now, on Wednesday, when we had this huge move higher, which was here, I had no internet. I had no modem. I had no internet. I had no TV. I didn't know what was going on. I suppose I could have checked on my phone, but, it's like whatever. Sorry. Well, yeah, whatever. I mean, whatever. I know how markets work. So we had this huge move. Okay, so let's kind of go through here and let's see what we should be looking at. I think ABBV, if I'm even saying right, I don't think anyone knows how the hell to pronounce this company. ABBV. There's some trading ideas out there in some of these stocks. There always is. But one of the things that I teach, at the Benzinga Trading School is you have to let the market tell you what to do. The market is smarter than you. It's smarter than me. It's smarter than the greatest trader who's ever lived in the history of mankind. The market is never wrong. You're wrong. I'm wrong. This person's wrong. That person's wrong. The market's never wrong. It can't be wrong. It's the market. What really kind of cracks me up is that every now and then, when the market's bad, like some big hedge fund will go under, and their thing is like, well, the market has become irrational. No, markets can't be irrational. It's the market. It's the aggregate of what people are thinking. So now ABBV here, I'm looking at because these biotech stocks have been in the news, and I think we got a trading idea here. Okay, the premiums for the options are probably a little bit costly. But I just want to go through this and give you a little bit of my thought process. Markets that are overbought and get to resistance tend to sell off. Write that down. And write down the opposite. Markets that are oversold and get to support tend to rally. Not a guarantee, but they just tend to. ABBV, we're at resistance. What is resistance? Notice how we got there. And there, we ran into resistance at a former resistance level. Resistance is a large group of sellers. The market gets to, and it doesn't matter if it's stocks, cryptos, bonds, whatever. Market gets to a level where there's just happens to be a lot of sell interest. A lot of people are probably telling themselves, if ABBV gets to 155, I'm going to sell. So we got to a level there where there's a lot of sell interest, which is why we haven't gone up anymore over the last few days. Okay? Overbought means that we are trading above what would be our usual or typical trading range. A lot of traders expect a reversion to the mean. A lot of trading systems on the street are based on this concept of reversion. So the fact that we're at a level where there's a lot of people that want to sell, and the fact that we're in a situation where the momentum is going to draw sellers into the market means it could kind of see a little bit of a move lower here. So we got to keep an eye on that this week. Also, a lot of these industrial stocks are at resistance. And here's DuPont. Yeah, so a lot of these industrial stocks could be at resistance. The market is overbought. The market in and of itself is overbought. Let's look at this healthcare sector. Now, you might be saying like, all right, Mark, okay, the market's overbought. BFD, what the hell am I supposed to do with that? Well, if the market's talking to you, it is saying, hey, it's time for reversal. Now, those of you who are listening to me right now, and I could tell there's a bunch of you guys on here who are my students in the Benzinga Trading School, we talked about, okay, healthcare is about to reverse. Why? Is it because, how did I know this was going to happen? Is it because I'm some super genius? Is it because I'm like touched into the cosmic harmony of the universe? No, has nothing to do with that. We got to resistance, and like I just said, there tends to be resistance at former resistance levels, and we are overbought. Overbought markets that are at resistance tend to sell off. Why is there resistance at a level that was resistance before? You might have if you've ever heard the term sell at former peaks. It's not, voodoo or astrology. There's a reason why there's resistance at a level that was a peak before. Here was a peak, here was a peak, and we got to a peak again. Why does this happen? Psychology. Okay, there's people who bought here who, when the price went lower, like, oh God, F this, I made a mistake. If it gets back to my price, I'm going to sell. So you got these remorseful buyers placing sell orders at the level that was resistance. If there's enough of them, it becomes resistance again. It's a very, very, very common phenomenon in markets. We call this market memory. Certain price levels that are important can be important for an extended period of time. It could be weeks, it could be months, it literally could even be years. For whatever reason, and I've been trying to figure this out for 30 years and I still can't, so I've stopped trying. I've just come to accept the fact that I can't figure it out, and I just accept it. Why does the market like this level? Why is this sector that's worth, trillions and trillions of dollars turn at these precise price levels? It defies logic if you look at it from the point of view of like fundamentals, so forth and so on, valuations. But if you understand psychology, then it makes complete sense. You have people that bought back here are trying to sell. That's simple. Why do we get support at a level that was support before? This is also psychology. This is seller's remorse. There's people who sold here. Once the price goes higher, like, I made a mistake. If it gets back to my level, I am going to buy my shares back. So if you have enough remorseful sellers placing buy orders at the level that was support, it can become support again. Why do markets rally off of support? If something gets to support or resistance, pay attention, because there's a chance to make some coin right there. All right? So check me out on the Benzinga Trading School. Why do markets rally off of support? Well, the buyers, there's a lot of buy interest down there. And the buyers start to notice, other buyers are coming into the market. So if I want to buy my shares, I better be willing to pay a higher price. So you get this bidding war, and you just rally off of support because you got buyers outbidding each other. It has nothing to do with the news. It has nothing to do with Jerome Powell or blah, 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 blah. One of the things I love to do at our school is just dispel all the myths on Wall Street. I spent more than 2 decades, I don't like to admit this because it makes me feel old, but I spent more than 2 decades as an institutional trader. I've seen it all. I was a market maker, overseeing the trading of probably 10 or 12 different hedge funds as the head of trading at a couple different institutional money managers. But, there's just a lot of myths out there. There's a lot of misperceptions. It doesn't need to be as complicated as it seems to people. What we're looking at is psychology. What we're looking at is supply and demand. If there's more demand than supply, things go up. If there's more supply than demand, things go down. If supply and demand are equal, well, things don't move. So as traders, we want to find things that are out of equilibrium. All right, so here's our S&P. We also saw some interest in action today in, let's go check out NVIDIA. Let's see what the hell is going on over there. Now, this is an example of a psychological level, okay? NVIDIA got to exactly 500, and it sold off. This is what I was talking about. We get to support, we tend to rally. We get to resistance, we tend to sell off. NVIDIA got to 500. Makes sense. Haven't you ever done this? Haven't you ever said, hey, if it gets to X, if it gets to 500, or if it gets to 20, or if it gets to 10, I'm going to sell or I'm going to buy. People like nice round levels. Again, if you think about valuations and price earnings ratios and so forth and so on, you can't explain that. But from the psychological level, it's like, okay, I get it. There is people that want to sell at 500 because it's a nice round level. Now, before I get going here, and please make sure you check back in at the trading school. I just think this is a really fascinating thing. And, I know I'm a chart geek, so please forgive me. Actually, you probably wouldn't even be here if I wasn't a chart geek. But if you let the charts talk to you, you can make some coin. If you try to make the market do what you want to do, hey, you're not going to be able to. So go do something else. Let the market talk to you. The best traders are agnostic and they let the market talk to them. If you understand this, it could probably transform your trading. If you've been losing and you kind of don't get it, and you think all this stuff is like so complicated and confusing, it doesn't have to be. How does the market talk to you? By how it acts when it gets to certain price levels or when it gets overbought or oversold. This to me is extraordinary. This is almost like understanding, what the physics properties of like a black hole are, or how gravity bends light waves. You have trillions and trillions and trillions of dollars in this bond market. It's way bigger than the stock market. And we got to exactly 5%. Not 5.01, not 4.99, 5%. This shows the psychology of markets. It shows the psychology of the people that are trading. A lot of people probably said, hey, if this gets to 5%, I'm out. That's it. 5% exactly. Let's not take this for granted. This is a market that's worth trillions and trillions and trillions of dollars. And it got to this perfectly level. Is that a word? I don't even know. You know what I'm saying. And it got to 5. So when you look at a chart, don't think about it as I'm looking at a chart of a stock or whatever. Think about it as I'm looking at the chart of the people that are trading this particular security. And the chart expresses the psychology, okay? Support became support again. And we can see this on, pretty much any chart. Sometimes it's more apparent than others. So I want to take a look at Apple. Yeah, so look here. Look at the psychology. Resistance here became support over here. This is Apple. This company's worth trillions of dollars. Yet somehow it found this precise resistance level around 190. And then when we got above it, the level became support. Why would resistance become support? The seller's remorse. People sell. Price goes higher. Like, if it gets back to my price, I want to buy my shares back. So if you have enough remorseful sellers placing buy orders at the level that was resistance, it becomes support. All right, everyone. So if you want to get in touch with me, please do. You should know how to do it. Mark Putrino at benzinga.com or marketstockmarketjobber.com. Please check in. We got a really cool class, and people like it, and we're building a great community. We had about 170 people there today. And some people sit on the sidelines. They don't really want to say anything. That's cool. I have no problem with that. And some people are very active. They have a lot of questions, and not just about the market, but it's like, what's a hedge fund? What's a market maker? How does Wall Street really work? And I enjoy teaching people. So thank you very much. I hope you have a nice weekend. For you football fans, there's a lot of football on this weekend. We got the NFL tomorrow and on Sunday. And that's it, everybody. I hope to see you soon.